All right. How's everyone doing today? I haven't made a YouTube video in a long time, so I'm going to do one today. I'm try to see if I can get a routine going. Um, I think that would be a good idea. Um, let's see. Yeah, so this video is going to be about how I'm altering my thesis about where I thought um, there was this gap area where I felt like once it hit a certain price, it was just going to shoot up to the next resistance zone, right? And so I'm going to update my thesis on that because I have a new uh, source of information over here. This is called Bookmap, right? Basically, I would call it level 3. You call level 2.5 if you want to. And basically, what it does is it shows you all the orders in the book um, mapped out on a heat map on your screen, right? So these are all the orders. I guess since the 7th till today, right? The 10th. So, well, I would say it was probably the 6th. Yeah, the 6th and the 7th, and then the 10th. So, one of these is a full day, the other is a partial day. I think it only shows me 48 hours worth of information. But since the weekend was, closed, there's nothing going on there. Therefore, that's a hole. That's a blank spot. Um, but what I want to do is I want to integrate the book map, heat map orders as supply and demand zones because that's exactly what they are. These are supply zones in the red. Then the green is going to be the demand zones, right? So those are considered support and resistance zones, right? Now, this is future thinking, right? So it's thinking, what is currently, and these things can change. People can place an order and decide that they want to change their order just by a few cents or by a few dollars, right? So, these orders, they evolve over time, right, with price action. But I noticed something about price action. Price action loves to incorporate, consume, to grab the liquidity, right? It likes to pull in money, right? Um, so if there's a staircase of buy orders going up, right, it's going to follow it more or less. It can do the same thing on the way down. If you have a limit order, say like over here on the heat map, there's a limit order that's got hot. The last Thursday and Friday really wasn't there. It was just more of a cool spot. And white still indicates black is nothing. White is like something. Yellow is something and more. And then red is like, orange, and then red is like, there's really a lot of things. You're talking about hundreds of thousands of dollars, right? $400,000, right? So this is like the sell orders. That would be right here in the past compared to right here, right? So, but incorporating or utilizing this data right here and adding it to my own previous thesis, right, is an update, right, to what's been going on right here on my technical analysis, right? Is that if we look right here around $4, that right there is going to be a demand zone, and then over here at around 380, there's another demand zone. Now, since it's after hours, you see this white spot right there. That's pre-market, and that's aftermarket hours. So it kind of like it changes the flow, right? Because only certain orders are going to be visible during pre-market and aftermarket hours. So that's the reason why it kind of looks a little bit different compared to the heat map. But the heat map is pretty much like, once it prints, it sticks and it never changes. And like the market's closed, and look at this. You see that? That's it. The market just closed. All the orders were wiped off the book, right? I never got to see that, but that was very, very badass. I wish I would have seen the very last order to drop off, but that was fucking cool. I got to say. Um, so, anyways, what I'm going to do is I'm going to try to incorporate the book map, the order flow, right, into my technical analysis as support and resistance zones. So, and I'm going to use the ones that more or less are the strongest ones at the closest point, right? Don't need to go too far away, like going down to the $2 or $1 range trying to find a buy order. But we could do it. Let's just take a look and see if there's any previous orders around. You know, under I wouldn't really say under a dollar. There might be. There's a speck of something going on right here around $3, but after that, there's really no orders. 350, 380, and $4 is where the demand zones are according to the heat map, or to market order flow, right? That's where the demand is, and this 350, it's like not very much, but the $4 is a lot, and the 380, that's good too. It's a lot compared to what you see down here, right? So I wouldn't be surprised if we have a market turnover that the market makers or whoever's in control push the price down to absorb the $4 liquidity and the $3.80 liquidity. Unless someone's spoofing, and that's against the law. We can keep track of that actually, because once it prints, it stays, and if you document it on either videos or you know uh, screenshots of some sort. But that's besides the point. So let's get it back to where it's kind of like in this zone right here. All right. And I do have that turned. I can kind of give it a little bit more visibility here. I don't want to give it too much, though. Trying to find the strongest, hottest part, right? So we'll give it a little bit there. So I actually went through uh, this this template right here and started setting up some of the supply zones and the resistance zones, right? According to right order flow. So I got cycle analysis. I'm not going to go through all my technical indicators, but it is there, right? So you know until they prove themselves not valid anymore, then um, that would, like, they're not really going to unless I no longer care to have it. But you can't time the market, but you can see patterns, and no pattern lasts forever. It changes. It's going to be a constantly evolving scenario, right? Um, but like this one right here, just for instance, it suggests that somewhere, if you draw a line in the center, somewhere from this time frame up to around there should be a low part, a low area within the price action, and everything from about the center up somewhere in this region should be a high point in the price action within within the other cycle analysis, right? Um, but then this is going to be um, a low point within that cycle from beginning to end, regardless if it's a upward or a downward trend. It's not biased to up or down. It's biased to beginning and end. So that's how that works, right? You got the left-handed translation, right-handed translation, and it's basically higher highs, higher lows, right? Lower lows, lower highs, left-handed, right-handed, right? The beginning is the high point on a downward trend, and the high point on an upward trend is the end of the trend, right? Not the beginning. So, yeah, if that makes any sense. Then I got the money flow profile, right, and my sub indicators here. This is another. This right here is a CDV indicator, just like how Bookmap has it. I have also one right here for individual time frames. That way I can see it on higher time frames. Bookmap is it does up to I think 1 hour. Yeah, anything past that it won't do. So like TradingView is going to do 4 hours. It's going to do a week. It's going to do a month. And with Bookmap, it's more about shorter time frames, intraday trading scenario. But it's still learning. It's still part of the stock market. Just like intrinsic value calculation, it's part of the long-term investment. You have to have free cash flow. You have to have the intrinsic value calculation to have an investment, years, and so on, 10 decades of, you know, of putting money into it. This is more of a tool where you can watch and see things. It's basically X-ray vision, I would think, level 2 version of it, right? Or level 3, I would call that. I don't know if there's an actual name for it, but to me, that's what it feels like. So, being said, the goal to what I'm trying to get on my YouTube channel, just have it on there, something that I've experienced and discovered, right? Look at I made fire, right? Really, I didn't make it, but I discovered something that was new to me, right? Um, so the hottest part, right, on the book map for Clover Health is the $5 range, right? Um, give or take 20 cents, right? $5, give or take 20 cents. That's going to be the hottest. The supplies on the spot with the most supply. So I got it up to about 9. Let's take a look and see. When I start squishing everything together, they start combining. That's the reason why now it looks like just one giant spot, right? But if I squish it together all the way, pull it down as far as I can, right? The hottest spot, other than this $5 range, right? It's probably going to be the 15s. Let me just double check that real quick here. All right. Yeah, that's $247,000. That's $227,000, and then that's $343,000. I believe that's exactly what that is. Cash flow, right? Order book, and the heat map. It suggests these are the areas with the highest supply zones, right? So 15 and 20 as of now, and definitely the 5. So, those are going to be points of interest. I believe I did not go as high as 50. Yeah, I did 15 and 20. Yeah. So I marked it out already. 15, 20 is a hot spot, right? Okay, here's another thing too. Now, back over here, right? I said to myself, well, once it breaks into the $5 region, it's going to have to fill this. To me, this is a giant gap. My thesis has changed now. This is no longer having book maps, seeing the order flow. This is no longer a gap fill zone. Hold on one second. Okay. I thought I had my heater on over here. This floor heater. It's just central heat and air. I need to turn it down. All right. So, yeah, I thought this was a hole that needed to be filled, right? My analysis now tells me that that's not where the hole is. There is a little bit of a hole there, small one, but it's not like the hole that I thought it was going to be. That hole does exist, and it's there is one that has. Let's see here if I can get it. It's going to be between $10 and $15. That's the area where there is present light. There's really nothing, no sell orders going on here. You got a little bit at 11, you got a little bit at 12, you got a little bit at 13, you got a little bit at 14, but it's not like stacked hard like this $8 one, this $9 one, this is it $9.50 I believe, and then $10. Right, these are all stacked on top of one another, real close. These supply zones. But after you pass $10, there's really nothing holding it back to shooting up to around $15. If we look at the chart, oh shoot. Okay. Well, I guess I was not gonna hurt nothing. All right. So we look at the chart. That zone on this graph is going to look like this around the $8 area to that the $16 area seems to be in here, but I marked it on the daily one. I just haven't. Let's see if I can do that real quick. Nope. No. Rectangle, that is right. But I need to. Okay, there it goes. All right. So this zone right here, this is where the hole is, according to the heat map. Now, like this money flow profile right here, this is telling the story what happened a long time ago. You can set it back to look, you got each candlestick represents week, right? So you can set it back to 300 candlesticks. That would be 300 weeks, right? 52 weeks in a year. So, you can just go ahead and round it, say 50 candlesticks. 50 candlesticks, you're going to get about a year, right? So you do 300, that's going to be 2, 4, 6 years. And really, Clover Health hasn't been around that long, right? So 50 is 100, that's 2 years, right? And 200 would be 4 years, and 300 would be 6 years. But nevertheless, what I'm saying is that the money profile is going to show you the information that happened in past tense, and the book map is going to show you the information that's present and future tense to some degree, because things can change, everything evolves over time, right? Orders change. When you think you want to sell today at a certain price, and a year from now, you might be looking at it as something completely different, right? Thinking of a different number. That's what the intrinsic value calculation says. The more data we get, the more calculations we could obtain just by that, in itself. It's the never ongoing evolvement machine, right? Okay, so yeah, I incorporated the book map into this, right, into my thesis right here. So I no longer believe that we're just going to shoot up from right here and then maybe go back and forth right here and then shoot up to there and go back and forth. I believe this area is going to be chopped like it shows here. So this one here is null and void. I do not think that that's going to happen anymore. That's gone. These choices right here are the ones that I believe can happen. Now I want to update this because if this is the in every support is broken becomes resistance, and every resistance is broken becomes support. So we're going to base it upon that. I did not get another time frame in here for the long one, so we're going to have to put this one here, just like that one. Do that. So here and here, that's where that's at. So we're actually going to bring this up to maybe there, and then I guess we can keep that ish. Something like that. I guess we can go inside of there. And then go from there. We'll pull this possibly down to there. All right. Now, I don't even believe it could do that. Not right away. It's going to be something like it could probably be a. What should I do here? If I'm going to be bullish, because the fundamentals, dictate that it's bullish. With the free cash flow that it has for the future, it has prospects here. So we're going to see how the pattern sets up. But I'm going to think that we could have a inverse head and shoulders pattern being created here. Something like that. That would be an inverse head and shoulders. And once it breaks the neckline, then it'll shoot up and fill this gap. So that's my speculation about the pattern that it could create. Um, Once it breaks through the $5 region, has to get up to at least 520 or above, right? Because there's that area, that 20-ish area. We need to break that also. So we need to find support around $5.20 to $5 after breaking above and going to the next level, which would be definitely the $6 level. It's right here. Let's zoom in on the heat map. Yeah, right here. $6 has been consistently an area of demand right there. And then there's a little bit at 650 from time to time. And then definitely $7. Definitely seven. Then definitely eight. A little bit at 750. So it's basically going, it's following this routine where it starts off in the single digits at each digit itself, right? At 6, at 7, at 8, and then it does a partial one at 850, at 750, at 650, just a little bit, right? And then it does like that. It does those digits. This is the pattern, the money, the book pattern that it has. And if we analyze a little bit deeper into it, and after we pass the $10 range, all right, start going into like the 20s and 30s, right? We look into it. Um, it still does the dollar, but after think it was like after 20 or something. After 20, it kind of like does it every 25 and then 30 and then 35 and then 40 and then 45. At least that's what I thought I seen going on here. See, like 35, 30. That was the hottest spots, right? So you had a really hot spot right here at $35, a really hot spot at $30, right? A really hot spot at $25, a really hot spot at $20. So 20, 25, 30, 35. Now, don't get me wrong. There's a little bit in between, right? This is a little bit of tad resistance. I wouldn't call this $28 one that tad resistance. This is actually a pretty good sized chunk. It almost rivals the $30 one. Let's see here. Yeah, it still doesn't, but let's zoom in 50, 65. See, 50K, 65K. It almost rivals the 30. So 28 is there, and 28 was the all-time high too, by the way. So that kind of makes sense there. But if we take it all the way back, you can see how it's been existent, right? Um, for that, for whatever time, I got Thursday, Friday, and Monday. So for those time frames. Um, so yeah, that's like the pattern, right? It's going to be like $6.50 a little bit, $7 for sure, right? 7.50 a little bit, $8 for sure, right? 8.50 a little bit, right? Then did we get into the $9 range? I'm not sure what $9 looked like. Let's take a look. So yeah, $9, 9.50. Let's kind of zoom in a little bit. $9, 9.50, $10, 8.50, $8, 7.50. So yeah, what's greater? $8 is greater than the 8.50. $9, 9.50. Okay, yeah, like single digits are going to be greater. Period. Right? It's like that's the pattern that it has. So like I said, the biggest challenge is the $5, give or take 20 cents. Like we can zoom in here. Like $5 or 20 cents, $5.20, give or take 20 cents. Because if you go like to the 480, I think it's 490. There's a high resistance point right there at 490. But if you go to like 480, not so much. But like 86 area, in this area right here, yeah, kind of, sort of. That's where the supply begins. It's like around that $4.80 area, and it starts to get heavy around $4.90 because it doesn't. It's like most of it exists at the $5 range, right? So we go back to my technical analysis over here. Um, you know, so this is the daily cycle analysis, and I have the weekly cycle analysis over here. We're in line for a conclusion on the weekly cycle coming up. Was that February the 18th? So within the next 2 weeks, there's going to be. I mean, it can happen prematurely and it can happen late. That's the reason why the square is right there. Technically, the bottom could be in right now. You know, MACD still shows weakness to it though. I mean, we got MACD rolled over here, red, and this is the actual. It's an upgraded version of the MACD. It's what is it? The adaptive MACD, right? So it's a little bit better than the original. It's an upgraded version, right? Uh, and then I got market structure over here with, like we go on and on about these indicators. But nevertheless, I incorporated heat map here as support and resistance zone. So I have a area right here that I probably need to darken up somewhat more. Let's see. Um, green. We'll do 30 instead. Okay. And update that. We could actually cite this also with the chart layout. So right there, that right there is considered a strong support area, strong demand area. But like I said before, if the market decides to do a pullback correction or any kind of have any type of volatility, and now since Clover Health is market responsive, I wouldn't be surprised if it absorbs the liquidity because after all, that's what the market is here for, is to absorb liquidity, right? Say financial, tool. It's a financial tool, right? So that would not surprise me one bit. Um, Other than the whole, like I said, past tense is right here. I got all this past tense on here. Got cycle analysis on here, updated with this. So now what I'm going to be doing, none of this stuff that I do is financial advice. It's just learning. It's a learning experience. It's me participating, a hobby, learning experience, all the above, an investment tool. Um, you know, so if I'm comfortable with doing some covered calls you know, on a trading account, right? And I want to be able to, participate in my long-term investment, and one angle and the other angle trade it, right? With the what is it like? With also having a chance to invest in it simultaneously, right? If it does play out to stay in the green to a certain degree, right? Um, then what I would be doing on that account, right? If I would have entered somewhere between this volatility that we have right now, this uptrend, right? So we have an uptrend on the weekly, we have an uptrend on the daily, within this supply zone. So what I would be doing is that I would be collecting shares at this point, and having even participating in some limit orders between here to there, right? And then selling some covered calls because this would be my average around this price where it's currently sitting at or something, right? Then I would sell some covered calls for the next level up. Since fucking $5.20 below to $5 is the strongest resistance, that means me placing, and then there is also resistance to 550, right? There should be, anyways. Yeah, 550 right here. There's some supply right there. So I would be selling covered calls at $5.50 in the short term with my trading account if I want to apply my trading method, as well as having a opportunity on my trading account to create it to a long-term investment. If I collect a premium off of those and never sell, and just acquire a different structured level, a footstep level, I guess you could call it, of different, um, as well as options too. So instead of buying shares, you could just buy leap options with the premium, right? You just buy leap options with it while it's at a low price, and then when you do your covered calls, maybe the leap options will somehow connect to it, but I don't think it's only shares. Honestly, I don't know if leap options would be able to be considered accessible for covered calls. I don't know. I gotta look that up. But if they are, they're great. You have two means of creating covered calls. You have your leap options you create covered calls with, and they could be, consumed within that. It would suck to lose them. And then also, the shares themselves to try to create that level up, in your trading slash, I guess, investment tool. Um, so that's what I'm contemplating right here with that. And there's something going on here. Let's see. I got some dots right here. I think I accidentally drew. Trash. Trash. Yeah. Okay. Somehow I was on the drawing tool. But nevertheless, I believe now that the price of between $10 to $15 is where the hole exists, not in between um, $5 to $7 or $8. I think that's pure resistance, and it gets thicker. If you squeeze it together, you can see it's thick up until it kind of relieves after 8 a little bit from 8 to 9, or yeah, 8 to 9. Then it thickens up again from 9 to 10. So this might be an area of just continuously moving up. So with this little resistance at the 50 cent stage of the 750 to 8. And then definitely a lot of resistance here from 6 to 7 lots. But yeah, the biggest challenge is right here, $5. Support is over here around $4 to $3.80. This zone and that zone. Um, so this longer time frame right here with the money profile on the weekly, it's like irrelevant. It's like it's taking data that's no longer relevant to the argument that we have of an uptrend, and it's trying to utilize it and describe to you where those zones would be. This is on the daily chart with this money flow profile right here. I believe it's more accurate because it's looking at the current data that we have in the shorter time frame. Um, This is the rest of it is also accurate, but the money profile itself is kind of is biased to the downside here because that's all it remembers prior to this move up, and it really can't justify it by looking at this. So, which means that the money profile is going to be biased to all the negativity that's been going on here prior to the company becoming fundamentally structured, right? Um, so I don't think that this is a very good, helpful tool. I believe this is more helpful than anything else suited with the daily chart. Longer time frames is probably not too much of a good idea there. But yeah, let's see. So looking forward, we do have the CVD in positive territory on the daily, positive territory on the weekly. The adaptive MACD is in positive. We had a rollover this week on the weekly chart on one of the oscillators. Money flow is still good. Everything's green-ish over here, right? Except for the MACD, it looks like it wants to roll over. That could be some consolidation. It's done it on this move here. Okay, it dipped right here. The spot right here could be similar to this, but that curvature is greater. But since we just started the week, there's no telling. That could turn into a light blue candle, and this line could straighten out, start pointing upward more. You but the daily's still negative, negative, negative. Positive here, and let's see. So like that. I found that this future cast algorithmic indicator that I have here, it does complement the MACD, but it complements the CVD better. So that's interesting. Um, That's the reason why I have it here instead. I really want to alter it to simplify it a little bit more, right? Okay, being said, I do also have my institutional buy order indicator, right? Um, on the daily and on the weekly. So as you can see here, it's spiked with the red, right? Which was a lot, a lot of going on. There's a lot of stuff going on here, right? Sometimes the blue will spike all by itself, as it did here, right? And here, the green is short-term money. It's like retail, um, investors jumping in, right? Here and here. Too bad I don't have the inverse version of this indicator. I might be able to speak with the developer of the indicator to ask him to create an inverse version of it. That way I could see when it's topping, when institutions are selling, distributing, right? Instead of accumulating, right? So, okay, I had to pause the video for a second. I had somebody knocking on the front door. Um, so yeah, that's pretty much the gist of it, right? This is what I think, and this is what I'm feeling, right? I'm feeling like we're going to consolidate in the range of $5 to $7 sideways here. This is going to be a good swing trading zone, right? This zone right here. But once we break that $7 range and maintain it as support and challenge the $8 and $9. So basically everything from about $5 to $10 is going to be the most challenging part. Once we break the $10, I think we're just going to shoot up to $15. I think this is where the hole resides. Um, so I believe that there's going to be a lot of chop over here. So right here at $6, $7, $8, $9.50. It looks like it's greater than $9 because of the $10 having so much going on here. It looks like it's greater. Let's pull it back a little bit, see what's going on. Yeah, for the data that I've collected, the 950 area is greater than the $9 area. So I wouldn't be surprised if it goes from $8 to $9.50, or even up to 10, and then finds trouble and then gets denied and goes back down to the $8 or to the $7. Since the $7 over here and over here seems to be more of a resistance area. Am I correct? No, it's more like the $7.58 area. Okay, so most likely the 8 and the 750 might hold as support. The lowest part would probably be the 7 part. I really don't see it going any further down after 7, after testing 10 and failing and coming back down to test 7. If it even does, it could test the $8 range and say that's as far as down as I'm going, right? Well, we don't know what the buy orders and sellers are going to look like by the time it reaches that price. We'll have to see when we get there. But it's my thesis. This is my idea. This is what I came up with. I've got a video of 45 minutes here. Um, yeah, probably next time I'll also go on some more. I got some more indicators over here, which are pretty cool. Let's see here. If I can get it. There we go. So right here, you got Mastering the Stock Market course, right? Um, it's by Albert Allen. He's a neurosurgeon. Um, he's all about fundamentals, intrinsic value calculation, free cash flow, right? So This is where millionaires are made. Not this. This is where intelligence is made, right? Graphing, technical analysis, stuff like that. This is where you understand TA, right? But to understand how millionaires think, to understand, you know, where where wealth is, where generational wealth is, where you know billionaires, millionaires, and all of us come together, right? This is how you do it right here. So if anybody's interested, you can check them out. Just Google it. Al stock trades. You can find them on YouTube. Also, um, and if you have any questions about them, let me know, and I will tell you, my experience about it. One day in the future, I'm going to create, um, a video explaining my situation, where I was before I joined this platform, where I'm currently at while I'm in this group of very well-educated, intelligent investors. And when that time comes, it's gonna be wonderful for everyone. So, but yes, we have some indicators over here that I want to get involved into. They're new. I've been researching Bookmap before Albert came out with his indicators. Um, but yes, they're all here, and we'll look at them later on in the future. It's something that's gonna be pretty badass. All right, guys, y'all have a nice one. I'm going to start getting all my circumstances over here wrapped up. Peace out.